Okay, hi everyone, it's MJ Lux here recording from Luxembourg. So today we have a little bit of a different video, a little bit of a twist. So I'm joined by my two new team members, Emma and Brooke. So briefly, Emma is the person behind the social media, so you may have seen new things on Instagram especially, so it's mj.jasinski. So see what's coming, the events I'm attending, a little bit of behind the scenes. And then Brooke will be helping out with the stock market portfolio, especially that she has a background in biomedical engineering and she worked for a venture capital fund before. So she will look into all the biotech stocks we have, and the aim of it is to find those that are very strong that we want to keep and maybe increase the position, and then remove those that are weaker. So very excited about that.
Hi everybody, my name's Emma and I'm a student at Miami University with Brooke. We are studying abroad this semester and we are very excited to be helping Marcin with his marketing and his investment needs. We have been working on multiple different marketing campaigns and we've done a lot of research this semester so far, and we are excited to see where this goes.
Yeah, I agree with everything Emma said, and I'm really excited to bring my biomedical engineering background to analyzing some biotech stocks that hopefully have a lot of potential.
So we have a few questions here for Mr. Jasinski regarding his career in investments and consulting. As younger students, we look up to Marcin and we would like to know a little bit more about him. And I think it'll be great for you guys to know him a bit more personally as well.
Interested in when you knew that you wanted to be an independent consultant?
I love my corporate career, right? Now as an entrepreneur, I think corporate people look down on entrepreneurs and entrepreneurs look down on the corporate. So there's a little bit of a fight there. The two are very different. I feel that, I really kind of progressed very, very quickly. I became the youngest manager/director at Reuters at the age of 23. At 24, I had a team of 2,500 people globally. At 26, I was a global head of marketing for a technology firm. And then at 28, I kind of felt, okay, I'm close to the top, quote unquote. Like I have enough skill set to be able to be independent and run on my own. So I think it just came naturally with maybe not the age number, but the experience that I've accumulated, and it just made sense. Okay, now I want to be independent, and you just get a lot of impact, if you have transferable skills. So, I think it just came naturally.
Yeah. How would you recommend others start their journey to financial independence?
What a complex question, right? I think just defining financial independence quickly, for me, it's generating more passive income than your expenses are. So this number is sometimes not as high as we think, and I think that should be addressed because it doesn't have to be that big, right? Mm-hmm. People can live below their means and save and generate enough savings and then invest them well, and it doesn't have to be a very, very big number to do that. So I think that's important. Few things. One is definitely live below your means and save and don't accumulate any bad debt. I live very frugally until kind of I went independent really and could do whatever I wanted. I was just focusing on work and basically worked, paid my rent and that's it. So, because you need to build a base, if you want to invest with me or anything else, if you put $1,000, it's different than if you put 100,000. So you want to build this savings if you don't come from money that you have money to invest. Just build your savings, live frugally, don't have any debt, and then invest in something that you either know or that with someone that you trust, or just find a good investment vehicle. Probably it's not good to invest 100% of your saved money in a crypto or something, because it's very, very risky. It can work, but it's not. I think people should not look for shortcut to success. Sure, if you invested in Bitcoin in 2013 or 14, you'll be quite rich right now, and this happens. But again, it takes time. Even that takes time. It's been around for 10 years or so. So, build a base, invest well in something or with someone you trust, and also use investment like a discipline. Just put 10-20% of your monthly income or whatnot towards investment. and kind of forget them, let it work for many, many years. And that should probably lead to financial independence.
Something that I'm really interested in is how has the investment world changed since you started your career?
Right. Oh, it changed dramatically. It's being so technology savvy, throughout my life, we went from, no phones to, stationary phone to mobile phones. And investments has also changed dramatically. Compare in the past, when I had a client, we had to go to an attorney, sign a power of attorney agreement, then I would log into someone's account, and then each transaction I had to do on this account. So what happens if you have 20 accounts? Well, you make a trade for yourself, and then the person number 20 probably gets a worse price because there's been 19 people that bought before them. When I started investing, we already had internet and you could make a transaction online. But in the past, you had to do it through a broker, on the exchange, shouting the price. So obviously this became very digital. So everything happens now online. I like to, so I'm on a tour right now, right? I've been in Portugal, then in Spain, in Monaco, now I'm in Luxembourg. And the purpose of this tour is to see my investors, see my clients, meet maybe some new clients, answer the questions. We had a very volatile period. A lot of things are happening, so people want to, so I'm used to this kind of face-to-face relationships because I think that's the way of building deeper relationships.
Of course.
But now with Zoom calls and YouTube and everything else, it changed a little bit. What eToro and I'm doing is democratizing the let's say wealth, especially wealth management and portfolio management. To give you an example, in the past, to invest in a hedge fund, you probably have to have tens of millions, if not hundreds of millions. It's very elitist and very high fees. You have to pay 2% for the management and 20% above the performance. So it's just very costly, very elitist, and only really for people who are very rich. Now, if you go on eToro, I think you can start with $50 or $200 or something like this, and you can buy a company without any commission, or you can copy me who does it, for the last 20 years. The long-term average return of a Standard & Poor's, the main index in the US, is about 10%. Right? So think about everyone now having access to that without any hassle versus, people not investing at all and having half a percentage in the bank, right? So I think that's really, really great. And I think, people your age, even younger or similar, you can start and you can do it for many years and learn. So I think that's a fantastic change, in the industry during my career, which is long, but not that long.
Yeah, definitely. It makes me excited that we have the opportunity to start so young, and that we can learn more through this internship. I didn't really have much experience with stocks, but I'm going to leave a lot more educated. Our last question to wrap this up is, what do you believe makes a successful investor?
Right. Another complex question. You don't really get a financial education in school, whether it's high school, or whether it's university, right? Even if you study finance, it's really kind of books, so you know some mechanism, but no one is really preparing you to invest for your own. A successful investor, I think the most important thing is to know what you're doing. So, a lot of younger people will come to me via Instagram or somewhere, and they'll say, oh, how can I invest? How I can become rich, or how do I start, and all these kind of questions, obviously. And one of the first thing I tell them is to, develop a knowledge into a specific, even an instrument. I had a meeting in Portugal with a person who's just been trading gold for the last 4 years. So she doesn't touch anything else, just gold, right? And so if she watches the market, whether it's political, economical changes, she's like, okay, well, maybe it goes down, maybe it goes up. But then if you do that, you know the price and the support and the resistance levels very, very well. So you have a chance to make a good return. If you try to do everything, just computers will beat you because you're slower than a computer. So if you say, oh, I want to buy at that price, well, computer has already done it. So in order to have an edge or be a successful investor, you need to develop something that whether it's trading gold, buying stocks. For instance, for me, stocks are the sweet spot because I worked for Rogers for 6 years. I have the tools to analyze the companies. So even if the company is very cheap and it's maybe considered risky, because I can see how much cash they have, how much debt they have, you know, what's their revenue projections, what they're selling, where they're selling. Then I can make an informed decision. So from my perspective, it's not risky because I know why I'm doing it. And to compare, let's say, Bitcoin, I don't know if anyone can value Bitcoin because at the moment, is it a digital currency? Is it the equivalent of gold? Will we be able to pay with Bitcoin everywhere? We're not sure. So I'm not criticizing Bitcoin, but what I'm saying, it is risky. Diversify is also important. So even if you find something great, you need to make sure that you still have something. So if you, let's say, if you invest in stocks or if you invest in real estate, nothing against it, but maybe put 50% in real estate and 50% in stocks, or you know, add something else to it, maybe buy a business, and you know, so just try to diversify your source of income. And I think to finish off, again, I could speak about it for a long time. I think discipline is a big word.
Of course, yeah.
So you know what you're doing, you diversify, but then you need to be really disciplined. Emotions are not the best, you know, guide to investment. So you need to try to be non-emotional about your investments. I had this question from a client about Aston Martin. I said, "Oh, you're so emotional, but about Aston Martin?" I said, "No, I actually shorted Aston Martin. That was my first trade, a short trade on eToro, made over 200%. And a great example with Porsche as well. Today, I bought it at 28 and I sold everything in 92. Does it mean I think Porsche is a bad company? No, but what it means is I bought at the price I thought it was very cheap. I sold at the price that I thought it's already expensive. So I still like the company, but at that price I'm not so interested. So I would prefer to buy something that's potentially cheaper. And that comes with a discipline, right? You have a lot of temptations as an investor, and you know, people are also, if I invested in crypto, my return would be better, right? So you're like, oh, maybe I should do that, but the discipline parts comes back to, okay, just do what you know and do it consistently, and then on the long term you have a consistent result. So so I think that's very, very important. And so
of course, well, thank you so much for answering our questions. It's been very informative. I definitely have learned a lot today that I didn't know before. Okay.
Yeah. Thank you, Emma. Thank you, Brooke. I hope that's useful for the listeners, and to be continued.